Hello, today is October 17th, 2020. Amazon is a stock that we want to talk about today due to the volatility in the name this week. It was pretty impressive volatility, a lot of movement, and we believe that was really driven by calls and call volume. This week, Amazon had Prime, and I think there was a lot of call buyers just trying to get in, and I don't know if they were trying to front run good sales or exactly what they were looking for, but the volume was just incredible. And so you could see at the end of last week, the 9th was last Friday. And then on Monday, we had this explosion in the stock price. It went from 330 all the way up into 3,500. And then it gradually kind of burned off over the week. And then this drop here came in literally like the last 15 minutes of the day. I mean, you can see this is 350 on Friday yesterday, and the stock just got pummeled. So what's fascinating about this is we flagged this name on Tuesday because of how big the call volume was on Monday. And we wrote a little blurb about it that showed in and showed in Zero Hedge. So if you Google Zero Hedge and AMZN, the ticker, this article will come up on a note that we sent out. And essentially what we were talking about was the call volume, which was about 350,000 calls traded on Monday. As you can see, sorry about that. As you can see here, and that was open interest of only about 490. So that's huge call volume versus open interest, and that really had a major impact of the stock. So we have this product called the Equity Hub. If you go to our website, SpotGamma.com, you can subscribe to the Equity Hub, and it allows you to search through 3,500 different tickers and look at the open interest and various gamma setups in the name. So this was flagged in this Zero Hedge article, which you can see here. So if you look at this chart, what's fascinating about it is that on Tuesday we said, hey, look, most of the call open interest is at 3,500, and there's something significant about 3,300 that our models pick up, and you can see that's what these dotted lines more or less represent. And what's fascinating about this is that the stock topped out right at 3,500. So if we zoom back on the weekly, you can see that on Tuesday afternoon it hit 34.92, and that was kind of the max. Like, it tested that area a couple times, and again, this is where all the big call OI is. But after that, it really kind of faded hard. And so if you again look back to our article in Zero Hedge, you can get a little more of how we viewed this. But essentially, our view was if that call buying subsides, there's a big burn in the name, right? Because the interesting thing about all those calls is they were all for the Friday, October 16th expiration. So 50% of the gamma in the name was tied to Friday's close. And so any of those calls that didn't go in the money, and if the stock lost momentum, those calls were just going to burn off, right? And what that means is that dealers who are most likely short calls are long stock as a hedge. And so if those calls start to lose money, right, if all those out of the money calls start to lose money, dealers are going to start unwinding those hedges. And seen in that light, there wasn't really anything exciting in the name again after that Prime Day. The overall market had some weakness, and so I think this is really a lot of just call burn, right, and excessive movement that was coming off. There was clearly just this big kind of artificial boost higher from those Monday options. I mean, the stock market overall just had a just dramatic surge on Monday as well, and then afterwards, the thing really just kind of rolled back. And what is really fascinating about these last 10 minutes is I think this is just a big market maker delta hedge unwind. So why do I think that? Well, one, let's look at two things. One, here's the open interest in the name. We calculate this from our data, and you can see that the open interest really in September and into October, call versus put is high, right? It's definitely higher than even in August when we had that, the whole SoftBank whale episode, all of that. The open interest in this name really had been building up. And so this, is excessive versus, say, I don't even say excessive, it's high versus where things were in the beginning of the summer. But you don't look at this and say, holy cow. But when you look at the call and put volume, you think to yourself, wow, this is something else, right? This is the Monday volume. I mean, this is really pretty amazing when you look at how big these volumes are. And so, this was activity we saw in a couple names on Monday, but Amazon was really just a big recipient of that. Apple was another one due, I think, to the iPhone release. And so, there was clearly just a lot of speculative money in terms of options money flowing into this name, and it set up this situation where we had, again, 50% of the option gamma expired on Friday, October 16th. And so, seen from our point of view, we had the situation where dealers are likely short of a lot of calls, hedged with long stock, and into the close when the name is clearly drifting off, and a lot of these calls are now not in the money. The dealer's risk is drifting way off. They have a lot of hedges to unwind, and what are they going to do? Well, all those hedges are tied to options that expire at the bell, right, at 4 o'clock. And I think they just have to unwind all these deltas, right? And I think market makers, the footprint that dealers and market makers have on their hedge unwind is unique. Because if you think about the number of entities out there that would be interested in selling stock to have this kind of impact, it's fairly limited, right? If you are a big hedge fund, for instance, you don't want to sell stock with this kind of impact. This is a $100 drop. If you're long Amazon going into this, you want to sell at a price that's going to hold up, right? Because you want to unload your whole position, because this is value to you, right? This is how you capture that alpha that you have. If you just blow out of the stock and have this much impact, this is just money lost if you're long the stock and selling. So maybe if you had a margin call, you'd do something like this. But I think in general, you're a dealer who just wants to unwind their hedge, right? Because they probably bought all their stock back in here when people started buying calls. So all those calls expire. Okay, we don't need these hedges anymore. Let's get out, right? We don't want to be long on Monday because we don't have any options position anymore, and we blow out of that position. And what's so fascinating is we're basically closed right back to where we were at the end of last week, right? There's now no movement in the stock. This is just one big mean reverting dump. And again, how many other entities would be interested? Yeah, okay, someone maybe you want to short and cover down here. But again, in the last 5 minutes of the day, probably unlikely. Like this to me just looks like dealer hedge unwind after just a massive bout of call buying. And so if you look at the current position in the name, again, you can come into the equity hub here and you type in Amazon and we show you all these different stats in the stock. You can see that now the biggest gamma expiration shifted to now next week, which is the 23rd. There's 34% expiring there. And most of the deltas, which are the deep in the money position, are out in January. So there's not a lot of deltas going on in this next expiration. And the picture of Amazon and its call setup is drastically different from earlier in the week. And what I mean by that is the gap between call gamma, which is the blue line, and put gamma, which is the orange line, is much narrower than if you see here at the beginning of the week, right? The gap here between call buyers, which is forcing dealers to be short call gamma, which is why you see big negative gamma drop here. This gap again is much different than where we sit now, right? Or at the close of expiration. And what's also interesting is 3,300 is the stock obviously broke that into the close. That is a number that if I had to bet, I would have bought this dip. If I was sitting here and I caught it, I would have tried to buy this dip under the belief that dealers would be most likely have pushed this or sort of artificially, quote unquote, knocked this price down so far. That's the unwind. I don't think it was anything other than, again, market makers unwinding those deltas. And so now that they're done, we may see a kind of a bounce up or a mean reversion back into this 3,250 to 3,300 area, because the current setup in the name shows that there's a lot of concentration and position where the put gamma and call gamma intercept here, right? But if you look at where the big deltas and gammas line up, 3,300 again is the key gamma strike, which is where most of the stuff for 1023 expiration is located. There are a lot of puts at the 3,000 strike. So if the name does move back down through here, there could be a pickup in selling, but really this is kind of a stickier area, and so I do think we'll see a bounce again in the name, just because I do think it was such strong market maker selling into the close. So that's our Amazon view. Monday will be pretty interesting to see if this thing bounces back, but again, I think it was mainly just dealer hedge unwind off of just very massive call buying in the name.